today we're going to do something kind of cool. Today we're going to be handing out free memberships to our Discord for the day to check it out and to see if it's something you're interested in. Now, real quick, I want to show you some recent results that I've had in the group and go into those in depth here as we get started. Again, this is a free thing for you to check out the Discord to see if it's a fit for you. And we're going to give you some information on that right after I show you here. Take a look at this. So this is some recent performance. These are lots of different trades that I've had over the last few months. If you would like to see all of these trades, we share them inside of our Discord channel throughout the week. We share lots of different stuff. When I say we, it's myself and Frank. I have yet to pull in Frank's data, but his will be in here soon. I just put together this spreadsheet and just exported data from our trading logs. But anyways, some things here to note about some of my personal performance over the last few months here. This is just sort of our overall combined results within all the trades that I've been sharing. The assets traded, so you can see the things that I'm trading. I've been trading a lot of S&P 500, a lot of gold, dollar yen, euro Swiss, euro dollar, pound dollar, etc. These are sort of the assets that I've been trading. And we can see we've had in the past here from this recent pool of data, 18 wins, 12 losses, about a 60% win rate, the pips, the losing pips, the average win, so on and so forth with a recent win to loss risk to reward of about 1.41. If you would like to try this stuff out, here's how you can get access. So at the very top of the description down below, if you click the link there, it's going to take you to this little window right here. This is a direct message center where you can actually have a conversation with one of our support reps here at A1 Trading. If you click this and click 50% off sale, or just click this and ask about the Discord tour. We're going to be doing a Discord tour opportunity where you can get access for free today to check it out for yourself. If that's something you'd like to learn more about the service that we offer, click that and find out more. Now onto the video. All right, guys, first things first, gold made a move higher over the weekend. Over the weekend, we had some stuff with Russia. We had potential takeover concerns, and the gold market floated a little bit higher, but the market is already sort of pricing this back down. And I've been pretty clear on my gold bias recently. As of my Sunday video, I announced that in the short term, well, this is nothing new, but I've been bullish longer term on gold. But recently there's been lots of hawkish central banks that have been putting a lot of pressure on the gold market and putting sell bias in the short term. Technically, this chart looks very bearish, right? So we had a range bound market, and to the bears' credit, we had a really impressive breakout. We retraced all the way back up to this zone and found sellers again. We found sellers again recently, and this morning we've been seeing sellers so far. For me, as a gold trader, I trade gold often. Right now, the bullish case is just not quite there. In fact, what I need for technically to see bullish case scenarios would be breakouts, retests, start to see higher lows. We're just not seeing that in this market. And recently the market looks very bearish when we scroll out and we see that, again, we kind of just have this downward sloping chart right now. And until that breaks the other direction, gold does not look very optimistic. In fact, this area, until proven otherwise, looks more like a sell zone than anything else, and looks like it has room to potentially retest the lows, continue. And again, until we see breaks, I think in short term, gold looks bearish. Let's take a look at the S&P 500. I currently have a trade open on this one, and it's not going so hot. So I'll show you my trade now. Let me just pull up my brokerage. All right, guys, and this is my S&P 500 trade. So you can see we are currently down on this particular trade, down about $600 on this one. My initial entry was last week, entered after a little bit of a rally off of the zone, thinking that we would continue, and I was wrong. So, however, my stop loss is below this market structure low. Now, this level notably was when the Fed paused. So over here, right around this zone, we had the Fed pause or skip, depending on who you ask. We saw the Federal Reserve essentially not raise rates for the first time. And the market reacted very positively following that. However, recently, with more hawkish commentary from Jerome Powell, it has been putting pressure on the S&P and caused a bigger retracement here than I was initially expecting. However, as long as we don't break this low, I will be staying in my trade. But if we do break out low, and by the time you see this video, I may have already been stopped out, I will take a loss on this one. This is not too much to worry about though. I've been on a really good winning streak with the S&P 500. I've had several winning trades. As I showed you guys earlier on that trading performance log, a lot of wins in there are due to the S&P 500. So I've been looking for this thing to hold. If it doesn't, like I said, I'll stop out with the potential to re-enter at a later point, perhaps a deeper retracement, which I'll have to come back to if that does occur. Again, if this level breaks, we'll be out of the trade for a loss, probably about $1,200 loss on that one for me going forward. Now we'll take a quick look at the euro. So the dollar movements recently have shown some strength. We've seen, let's come back to the euro in just a second. We'll take a look at DXY. Price broke out here of this downward trend and a pretty impressive breakout higher. Price retesting today. This is going to be a big test for dollar bulls and bears. Watch today's price action. This is a 4-hour chart. We could drop it down to the 1 hour and we can see that price is reacting pretty well to this area here. If price is able to continue to push, this probably puts short-term bearishness on the gold market as well as the S&P 500, NASDAQ, that sort of thing. And it does seem to be holding so far. So short-term, it looks like bulls are in control for the dollar index. I think for me, you know, when I look at 103.35, I'd probably be hesitant if we do see a run back up to that point. You know, bulls may want to be cautioned up in this level as we may start to see sellers take back advantage of this. On the higher time frames, we're still in a pretty solid downward trend, I would say. So here is your 1-day chart. We saw a rejection around 104.4, been seeing pushes lower. So yes, we may be due for a deeper retracement. If we take a 50% retracement and point out this zone, you'll see it lines up pretty well with the zone in red that we have drawn. So we'll see if that level comes back into play. I do expect to see some reaction to that area. And again, longer term targets for the dollar for me are still a return back down to lows around 101 on the dollar currency index. So let's go back to that euro and take a fresh look there on the euro USD. Here's a daily chart. Again, I think longer term, flipping the dollar index idea, I think we probably eventually head back up to this zone here. In fact, let me draw this as a horizontal ray. So this is kind of a longer term target for me on the euro. I do think we have room to go back up there as the Fed continues to be looking like it's sort of entering the last leg of its tightening cycle, especially with that pause. Things seem to be slowing down on the rate hike side of things. And I think that, you know, there's a divergence creation there between the ECB. Anyways, price action wise, we still have this hurdle to get over. I think you need to start seeing breakouts before bulls can take back control, meaning breakouts here, that sort of thing. Could be a leg higher for the euro. My opinion, short term, looks like it has some resistance in this area. We could see movement to the downside in the shorter term. We'll keep tabs on this one. We'll take a look at the pound USD as well. Here's the pound. Pound looks really strong and really strong. I'm going to show you guys some data here in just a moment. So pound USD holding support here looks likely. I think we do see a return back to the highs sometime in the near future. Short term, that is kind of my target on the pound USD. This one looks really bullish, and I want to show you a couple key indicators as to why. First of all, take a look at the GBPCOT data. Now, here on the channel and at my company, A1 Trading, we build tools for traders, and we very, very much focus on the commitment of traders report data. And what we see for the pound is really interesting. So this week we saw a massive increase in the number of long contracts and reduction in the size of short contracts opened by institutional traders on pound futures. This is from, again, the COT data. We pull this in each week. Our software automates this process for you to make it really easy. There will be information down below in the description if you'd like to get access to our software. It is not free, but it is something we've worked very hard on, and you'll be able to get it for a very reasonable price, especially if you're a serious trader. These tools are sort of one of a kind in the industry right now, and something we're working really hard and investing a lot of time and money and team effort to build these tools that you see. Anyways, big institutional interest on the long side of the pound is very interesting. But then also I want to show you the central bank forecasts. There's a bit of a divergence here that I really like. And Frank actually pointed out, we'll come to Frank in a second. We'll have a clip shown at the end of this video on pound NZD, which is a trade Frank is looking at. I thought it was very interesting. But let's focus for a second, just pound USD. The pound is expected to keep rates elevated for quite some time, cutting towards the end of 2024, but their inflation is very persistent, so there's possibilities that this stays even longer. That is one side of the coin, but it's a different side than the other side of things, which is the US, which again, markets are expecting the Federal Reserve to sort of get more dovish here sooner. Now, again, when we take a look at the price, you can see the market participants think that this chart is overall bullish as well. And when we go look at the central bank comparison, we use the central bank forecast, we can see projections for for interest rates to start coming down here around the same time. But again, inflation is much more under control in the US compared to the UK. I know that might be hard to hear for the US people, but trust me, my UK friends are in more of a troubled situation than we are, I think, in terms of the inflation stuff specifically. Anyways, pound pairs are really interesting, and Frank made some great points about a trade that he's in on pound New Zealand. So he's actually looking to get long pound NZD, and I'll let him explain that from today's live stream show where he was a guest. Check it out.
The only really clear bias I could find was on the pound side. So huge shift in sentiment here. The amount of longs increased. Let me hover over it with the mouse. That's 25,000 is the number of longs changed in the course of last week versus the number of short changes. So what they're doing is they're heavily increasing their long position sizes while decreasing a big chunk of their shorts. So the sentiment was mixed like a few weeks ago. Now we're seeing more of a lean towards the pound, which is pretty promising. Other than that, I was looking at the Kiwi, which kind of, I guess, is mixed sentiment, but what you can see is both a decrease in longs and shorts from the previous week. So 44 to 55%, like that's still kind of mixed, but overall it looks like the bias is still kind of leaning towards the downside. Maybe even a decrease in volume on the Kiwi. So not a lot of activity there. They're not very, bullish or bearish, as you could call it. But what really caught my eye was this sort of currency pair bias chart, which what it does is it measures the net longs of both currencies. So what we see here is kind of minimal activity, still a slight lean towards the pound against the Kiwi. And then last week we saw a huge jump. So we can also look up here to look at the amount of longs versus the shorts. So pound is up, pretty steep rise from week to week, while looks like the Kiwi's kind of peaking and falling from there. So I took a trade on pound Kiwi this morning. Got in around, I don't actually remember, but I got in about an hour ago or less. So slightly hovering in profit, but hoping to see a test at resistance up here at this triple top, and then hopefully a break from there. But we'll see if price can hold this sort of trend line. The UK is battling some pretty stubborn inflation. Their CPI hasn't moved on a month-to-month basis, so they surprised with a 50 basis point hike, which is pretty hawkish, but it's not just ending there. What they talk about going forward is to remain aggressive over time. So what the BOE is likely to do is keep rates high and wait till even next year before they even think about cutting. And you got it pulled up right now.
Yep.
This is the short-term interest rates staying as high as they are. Meanwhile, the RBNZ is already at their highest point, according to them, and they're not looking to go much further from there. So the short-term interest rates probably rise a little more, but their funds rate is likely to stay at 5.5. I believe that's where it's at. So looking forward, pound looks more hawkish than the RBNZ's Kiwi. So I'm looking at COT and then interest rate projections over time. And you can see on the hawkish dovish scanner, NZD's all the way at the left, which is the extreme dovish signal, whereas pound is a lot less dovish. So looking at just biases and price action overall just looked like a decent setup for me.
Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.